Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. It's been a heavy week of data, and it's not over yet. ISM non-manufacturing in the U.S. missed this morning. Ultimately, though, this was a downbeat number compared to some of the other stronger services reads from around the world. China last night and across the Eurozone today. You have the euro up about a half a penny. Now, it did respond against support. So what we're looking at is the dollar index failing against that March high, and then the euro finding good support about 112.5. Listen, a lot of this data matters. It's going to be important here as it sets the landscape up through the week. But really what it comes down to is non-farm payroll Friday. Still, tomorrow morning we look to factory orders from Germany, and these numbers, the manufacturing, industrial numbers, industrial production happens to be Friday morning, but these numbers have been very poor out of Germany, so this is going to be an important read. It's either, if it misses, you're going to start to hear the recessionary fears. Remember, Germany's right in the center of the economy east of the United States. So if it misses, you're going to hear those recessionary fears. If it does come in better, the euro should respond and move up fairly quickly. It did fail against first key resistance right about 113.30 today. That's going to be the area it needs to close above just to neutralize this ultimate weakness. Until it does that, it's in a very strong down move in the very near term. So watch for that. And then, again, non-farm payroll is really what's going to be in the mix as we look towards Friday and we move away from some of these numbers through the middle that we had the middle part of the week. Now, for the yen, there is a 30-year JGB auction tonight, but look where the yen is closing today's session. Right back down at near that 90 mark. The continuous 200-day moving average comes in right above 90. This is a level that if the yen gets down below, then it's going to be considered a failure on this rally. And below there, you're going to start to see those bears come in there and try to sell it. Could quickly find a path of least resistance lower. What's dragging this thing down? Because the dollar is lower. What's dragging it down is the safe havens. You're seeing treasury prices get hit today on that upbeat news on the U.S. and China trade front. Treasuries got hammered. Gold couldn't even do anything with the dollar falling. Same thing with the yen. The yen is moving lower as well. So keep an eye on that. Very unenthusiastic trade as it approaches the 200-day continuous moving average. Now, lastly, with the commodity currencies, they're a little more bright. You have the Canadian dollar and the Aussie dollar consolidating, and it is trying to be a bit constructive. Now, we're not really upbeat on these quite yet, but they are trying to close out above resistance. Now, in the Aussie particularly, that's a 71.30 area. It just cannot really get out above there. However, it did shoot up last night on that U.S. and China trade news, but again, it couldn't close out above 71.30. That's the area that's our major three-star resistance. We need to see that close out above there. But look at the broader risk sentiment. We've had good data out of China this week. It's going to really matter as we look towards the back half of the week what that U.S. dollar does and what do some of the broader markets do, because copper could not hold those gains. Now, copper fell almost about 8 or 9 cents from that high on Sunday night. It is bouncing back from its low near 290 on this on the U.S. and China news through this into this session, and that really is it's what's helping the Aussie dollar. You're seeing some of those commodities move. Crude oil has been trading very well through the week, but again, the Aussie hasn't been able to get out above that resistance. So keep an eye on that. And then for the Canadian dollar, it's going to come down to IVPMI tomorrow. Now, this has been a very poor number. Last month, it missed really wide. These expectations are set very low tomorrow. Crude oil was a somewhat, really actually a very bearish number, but it couldn't fall apart. If crude oil moves lower and IVPMI misses, look for the Canadian to move lower sharply tomorrow. But if IVPMI surprises to the upside, we could see that Canadian finally get a little bit of momentum. But again, everything's going to depend on that non-farm payroll number on Friday and what that U.S. dollar does. Give us a call. We're here to help with anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.